Greetings, members, one and all of the Salivation Nation. Gold, a monument to irrationality? Are you kidding me? Let's explore. Yes, this is from an article from Bloomberg Opinion, and the author here believes that gold and Bitcoin as well are monuments to irrationality. I'm not sure exactly where he's going with this, but upon reading the article, he's talking about and admitting that gold's price has risen 7% in this month alone, and Bitcoin has performed very well too. But nonetheless, Bitcoin doesn't have quite the track record that that gold has. And admittedly as well, Bitcoin and cryptocurrencies in general are a bit more of a speculative play and are backed by, the faith that, the people have in the system itself, which is the blockchain and the performance of Bitcoin over the past few years. There's a lot of psychology in both markets, and that's we have admitted to. However, there's something the author is missing out on. But if we go through here, talks about that Bitcoin is going to be digital gold, according to cryptocurrency booster Mike Novogratz. And, that's kind of the next level. That's something we haven't really seen play in the decentralized nature, which is one of the appealing aspects of gold. The fact that it's decentralized, it's something that you can hold independent of the banking system out there for sure. The self-justification of gold bugs and crypto fanboys are starting to sound remarkably familiar. They both offer the prospect of sound and stable repositories of your cash at a time when central bankers are printing money like it's going out of fashion. And Bitcoin, it's easy to laugh off any claims of stability given its Wild West status and mad gyrations in value over the past few years. But gold, the barbarous relic, as mentioned by John Maynard Keynes, this is something that the author of this particular opinion piece is quoting as being what he feels correct. It's hardly a guarantee of boring reliability. And he uses his foundation off of one particular spot in time. We'll talk about that here in a moment. The creed of sound money as a safe haven paints commodities that have a fixed supply as good, and the sovereign currencies with a potentially unlimited supply as bad. Well, that makes sense. The past decade's experiment in quantitative easing and negative interest rates have energized its inflation-obsessed disciples. Gold is nobody's liability, and it can't be printed. Robert Mundell, an influential Columbia University economist, said in 2011, which was the year that we saw gold really jump up in price. Cryptocurrency evangelists sing the same tune. Bitcoin, there's only going to be 21 million of them mined. It's getting more difficult to mine. However, there are other aspects, I think, that make that make that aspect of Bitcoin, though appealing. They apparently they won't be able to mine more of them. There are forks that do happen in Bitcoin and Bitcoin Cash, and the forking that's been going on in the blockchain, taking a lot of energy to mine Bitcoin in that aspect and to manage it with that ledger known as the blockchain. Bitcoin has no central bank, and its supply is capped by algorithms. The idea that these are stable stores of value doesn't stand up, according to the author. In 2018, Bitcoin lost almost 2/3 of its worth after a 15-fold price jump the year before. There's no guarantee that the 220% price rise in 2019 won't unravel. Demand for the digital currency ebbs and flows, largely driven by emotional factors like greed and fear, while its value is purely in the eye of the beholder. In other words, it's speculative, and it is still largely unused as a way of exchanging goods. So here, the concentration of Bitcoin wealth among whale investors, about 1,000 addresses controlled by 85% of its supply, means that they can greatly influence the price by either taking their stash out of circulation, by hoarding it, or by pouring more supply in by trading it. Gold isn't much more rational, and that's where the irrationality of this argument leaves, because you really can't compare Bitcoin with gold, in my opinion. I think the only thing that ties them together is the decentralization aspect. But that's about it. Bitcoin is more of a speculative play, and I see a Bitcoin as a, not necessarily a hedge, but it's a moment of exchange, just an alternative currency. Adherents believe that its thousands of years of history, gold, as a means of exchange, show it will always be in demand and retain value. And that's true. But gold prices, too, demand on human psychology and herd-like investment behavior. Well, that's where the logic, I think, escapes the author of this particular piece, because, human psychology and the herd-like investment behavior in times of fear, where do they always go when the markets are unstable? And what have they been doing for literally millennia? That's what they do. It's just a repeat of the same old, same old. And why? Because it's logical. In other words, people know you're always going to go back to the safest bet when there's times of trouble. And what can you rely on the most? Well, gold as money. Central banks are doing it. Nowhere in this piece is there any mention of central banks. Whole governments and central banks that are literally hoarding this metal at record paces now. The yellow metal's price hit a record of about $1,900 in 2011, but soon fell despite market expectations of a longer boom driven by the first waves of monetary easing. They're still about 20% below that level today, but that doesn't matter. Take 2011 and what happened there completely out of the mix. Gold is going to do what it's going to do, in spite of spikes and dips as such. And in fact, 2011, as I've said many times on this channel, 2011 was an anomaly. It was not the standard, it was not the norm. There's factors that came into play that were unique to that time and period. But nonetheless, gold and its performance rely on something much larger than just one point of time. You can't just pick and choose one particular time in history to promote your argument. It doesn't work that way, because you're always going to be the exceptions to every rule. But the rule of gold is that it has been a store of wealth for millennia. That will not change. The Bloomberg Barclays Global Treasuries Index, which measures the performance of sovereign bonds, is up about 11% over the same period on a total return basis. Well, again, you're looking at, obviously the bond market, but the bond market is suffering right now. And what does that mean? That could mean we could possibly be in for an economic downturn. And if that does happen, regardless of Bitcoin and the comparisons there, what are people going to turn to? They're going to turn to the ultimate safe haven, and that is gold. Yes, indeed, gold, this metal right here. And so that's the thing that, and you're looking at that history and what gold is about. I think it's certainly something to kind of explore a bit. But finishing out the article here, it says even irrational markets can be exploited by shrewd investors. Well, that's true. Gold or Bitcoin may somehow make sense in investors' portfolio as a way to add risk or diversification. That's true. I think gold is a much better bet for that, for risk diversification than Bitcoin. Bitcoin, I think, is still too speculative at this point. And even though more and more agencies and institutions are accepting it as payment, it's really essentially a risky investment, a speculative play at this point. Don't mistake the recent market moves as expressing some kind of proof of the sound money status of gold or crypto. That is all backed by faith, not fact. Well, I tell you what, that is the zinger of this particular article that it ends with. the market moves as expressing some kind of proof of sound money status. Well, we don't need just these markets at this one particular stage of economic history here in 2019 as proof of sound money. We have literally thousands of years of history on our side where gold has surpassed all the fiat currencies in history. Make no mistake, fiat currencies eventually go to their grave. Gold does not. Gold will last on forever and ever, and it will be seen as sound money, I think, forever and ever, despite Bitcoin. I think it's interesting that they tie gold in with Bitcoin. They're basically trying to lump them together as being the same, but they're really not. In fact, if anything, Bitcoin is just another kind of currency that is based off of the energy consumption to mine it. That is the value that it holds about energy already consumed. Obviously, it does take energy to mine gold for sure, but its value is based off of its rarity and its fungibility and its worth and the history of it as being sound money. That is intrinsic value that is above and beyond what you would find in other asset classes out there. You know, it's interesting. So let's explore a bit for a moment here the fact or the example of gold as sound money here. Let's take a look here at these particular coins here. We've got a Krugerrand here that was the very first bullion coin ever minted, and that was in 1967. This was the very first bullion coin ever produced, and after that we saw a lot more governments starting to issue bullion coins, but the first was in South Africa. Gold is being used as currency for millennia, and this is the United States Double Eagle gold coin, and it is being used as currency and it's also enshrined in the Constitution. And so I think this is an example of what true value is, and this particular gold coin could have probably bought you in 1895 a very nice suit. And if you were to cash it in today, especially today, you would get yourself a very, very nice suit as well. So it holds its value, it retains its value. This was $20 back then, and $20 in worth of gold was, you know, the amount, and that you can see how inflation has moved and how the fiat currency has become much weaker, but yet gold, the value thereof has retained its value, even though there's more gold produced today than there was in 1895. This is a gold bullion coin from that came out in the 90s, and it is from Austria, Philharmonic. And this is just an example of more and more nations, even smaller nations, producing bullion products out there. You know, small nations have their input and have added to the world bullion market, and I think it's a wonderful way and example that that you can preserve your wealth with a variety of different options that even sovereign governments, in spite of some of these Keynesian economists have put out there, and that we can trust in gold as being the ultimate form of value out there. So post your thoughts below. I'd like to extend a multitude of gratitude to y'all for watching, and encourage you to please rate, share, comment, and subscribe. There is one other thing about gold that I think should not be left out in this discussion, and that is it is awesome. It is just beautiful. You know what I'm saying? You get my drift? Gold. It's a beautiful metal. It has been desired throughout history, and I think that's something that is worth noting. You hold on to gold, and you know you've got something of worth, you've got something of value, you've got something of substance, and it's beautiful. There you go. enjoy it. Enjoy your gold. Even if you get 1/10 of an ounce at a time, you've empowered yourself. All right.